moving average. This indicator is the first one for lots of traders, known by its simplicity and powerful predictiveness. It is very easy to use. When price go up across the EMA, it means a bullish trend. When the price undercross the EMA, it means a bearish trend. But like the laws of the universe, there is nothing great for all. EMA is lying indicator, which will make you miss out on some big move in the market and also cause a very poor reward and risk ratio. Maybe you have a question: what does poor reward and risk ratio mean? Let's look at this example with traditional EMA. You enter a trade late in the trend. Your room of stop loss needs to be very large, and the room of take profit will be very small. With this new EMA, you enter your trade early in the trend. Your room of stop loss can be very small, and room of take profit can be very large. Open Indicators tab and search for their log EMA version 2. We need 3 lines, so you need to click 3 times. In the settings part, change the period of the first demo to 20 and change the plot color to green. Change the period of second demo to 40 and change the plot color to red. Change the period of the third demo to 60 and change the plot color to blue. If demo orders like this, green on the top, red in the middle and blue on the bottom, it means a bullish trend. If demo orders like this, blue on the top, red in the middle and green on the bottom, it means a bearish trend. So how to use this indicator to enter our trade? The strategy is pretty simple. First, we need to wait for the bull trend to occur. Second, the price needs to pull back to touch the red line, but not to touch the blue line. Third, when the price crosses over the green line, we can enter our long trade and place our stop loss under the recent swing low and place our take profit with 2.5 risk-reward ratio. And now sell example. First, we need to wait for the bear trend to occur. Second, the price needs to pull back to touch the red line, but not to touch the blue line. Third, when the price crosses under the green line, we can enter our short trade and place our stop loss above the recent swing high and place our take profit with a 2.5 risk-reward ratio. Now you already understand the fundamental usage of ZEMA. Actually, I will suggest you to use ZEMA as a confirmation for other indicators. You can combine it with the RTI indicator in this video or any other indicator to create your strategy. Just keep in mind 3 things. First, always backtesting. Backtesting is the most half thing in technical analysis, which can give you statistically proven evidence of your strategy. Second, always using confirmation. Don't over-rely on a single indicator. Always use at least 2 indicators to filter out low accuracy entry points. Third, always using risk management. Every strategy needs to have a very specific stop loss point, take profit points, and specific amount ratio of funds. Otherwise, your trading decision will be controlled by emotional news, fear, and greed. If you have any questions about the strategy or anything you want to know, let me know in the comment sections below. Hope you found some value in today's video. If you did, you can hit the like button below and support us in the comment section. Also, don't forget that you can find useful daily market analysis in our Telegram channels. Links you can find in the description. Bye and have a good day.